Hello friends, welcome to Fab Classes. So it's been a very long time. Actually, I was busy with my exam preparations and all, so I could not upload any video. But now we are back with our solution series again. Group 1, Paper 1, Accountancy itself. And now the chapter which we are starting is chapter number 9, Investment Accounts. Okay, so without wasting much time, let's go into the chapter itself. So I have already uploaded a conceptual clarity video relating to the investment account. So if you have any doubt relating to the concept of the video and how to solve a problem in the investment accounts chapter, then please do watch the video and then after that you come on to solving the problems. So now in this series we are going to solve all the illustrations and practicals from our investment accounts chapter, and we are going to follow the new study material, that is the material applicable for the May 2021 examination onwards. So okay, let's move with our illustration number 1 itself. In 2011, Mrs. Y Limited issued 12% fully paid debentures of rupees 100 each. This is the face value of the debenture. Interest being payable half yearly on 30th September and 31st March of every accounting year. On 1st December 2012, Ms. Bull and Beer purchased 10,000 of these debentures at 101 X interest price, also paying brokerage at 1% of the X interest amount of the purchase. So, Mrs. Bull and Beer purchased 10,000 of these debentures. We have invested in the debentures of Mrs. Y Limited at 101 X interest price, also paying brokerage. On 1st March 2013, the firm sold all of these debentures at 103 X interest price, again by paying brokerage at 1% of the X interest amount. Prepare investment accounts in the books of Mrs. Bull and Beer for the period 1st December 2012 to 1st March 2013. So let's prepare the investment account. So let's see the format of the investment account now. So in the books of Mrs. Bull and Beer, this is the first thing which we have to write. Then investment in 12% debentures of Y Limited. What is our investment? That name of the investment. Then investment account for the period 1st December 2012 to 31st March 2013. Okay. And inside we can also mention in the bracket the interest dates. When is the interest receivable relating to these investments? So that is 30th September and 31st March every year. So half yearly we will be receiving interest on these investment. So now let's move forward into the question. So the first thing is, on 1st December 2012, Messrs. Bull and Beer purchased 10,000 of these debentures at 101 X interest price, also paying brokerage at 1% of the X interest amount. So we have purchased at face value is 100, but we have purchased at 101, and along with that we have also paid a brokerage of 1%, and this is the X interest price, okay, not cum interest, it is X interest. So if you people don't know the difference between X interest price and cum interest price, as I said, watch the video relating to the concept of the investment account and then do have a look at the solutions. So okay, let's start. So here it is purchasing of the debentures. Debentures are investment for us. It is an asset and the debenture thus increases and our money goes out. So the entry for the purchase of debentures will be like 12% debentures account debit to bank. That means investment account debit to bank. This is the investment account debit to bank, and the quantity of the debentures. So before that, let's discuss this ledger format of the investment account. So date column is there, particular column is there, and the quantity column is there, then an interest column, as it is a fixed interest bearing security. So quantity, interest and amount column. Again date, particulars, quantity, interest and amount column. So the first entry is investment account debit to bank. So to bank, the quantity is 10,000 and the amount and interest is what we have to find. For that purpose, we have to prepare a working note. So working note number 1. Purchase price of debentures. So the cost is 101, right? 101 is the X interest price. So the payment which we have done is 101 for 10,000 debentures. So 10,000 into 101 into 10 lakh 10,000. This is the cost of the debenture, and along with that we are also paying 1% brokerage of this 1% brokerage of 10,10,000. 10 lakh 10,000 into 1%, that is 10,100, and this is the X interest price. In that sense, this price, this 101 X interest price does not include the interest, so we are not required to separate the interest from this price. So this is the cost at which we are going to purchase. So the value will be 10 lakh 20,100 will be the amount or the cost of purchasing the debentures. Okay, so the cost of purchasing the debenture is 10 lakh 20,100, and now we are supposed to find the interest of the debenture. So let's see this working note number 1 itself. Interest calculation. The debentures which we are purchasing is 10,000, right? And the face value is 100, in the sense 10 lakh. And the interest is payable at 12% per annum. 12 by 100, okay? 12 by 100, okay? 12 by 100 into how much interest we are going to get in this. So for that, let's see the question. We have purchased the investment on 1st December 2012. The last interest which the other person received, that is the last date of interest, was 30th September, right? So we have purchased on 1st December. So for 2 months, 30th September, October, November, for 2 months we did not have the interest in our hands. We did not have the debentures in our hands, right? So for that 2 months we are not eligible for the interest, but the owner of the debenture at that time is supposed to get the interest. From Mrs. Y Limited, we are getting interest on 30th September and 31st March, but we have purchased on 1st December. So for 2 months we did not have the debenture in our hands, and we are not eligible to get the interest for that 2 months. But when we are receiving the interest on 31st March, now we have purchased on 1st December, and now we will be getting the interest on 31st March. So on 31st March we are going to get the interest for 6 months itself, not for 4 months, not for 1st December to 31st March. We will be getting for 6 months itself, but we had the debentures in our hands only for 4 months. For 2 months we did not have the debenture in our hands, right? But we are going to receive the money for 6 months. So that 2 months money, while at the time of purchase itself we are showing it as interest, or we are paying back to them as interest. We are paying to Mrs. Y Limited as interest, so that interest should be calculated and returned in the interest column. That will also be a part of our cost. I think you understood. So that is the thing. So it is for 2 months, right? 10 lakh into 12 by 100, 12% into 2 months. For 2 months we did not have the debenture in our hands. Therefore we are not supposed to get the interest of the 2 months, but we are getting the interest of the 2 months also. Along with the other interest, we are also getting the 2 months interest. So now we are at the time of purchase itself, this 2 month interest we are paying to Y Limited itself. So let's see. I hope you understood this concept. If you did not get it, once again you have a look at that video. In that conceptual clarity video, I have already clearly uploaded the details relating to this. Okay, I've clearly explained this concept. So the interest is 20,000. So we were not eligible to get this 20,000 because we held the investment only for 4 months, December, January, February, March. So while we received the interest on 31st March, we were supposed to get the interest of 4 months only, because we held the interest only for 4 months. I mean, we held the debentures only for 4 months, but the company is giving us the interest for 6 months, because they are paying interest on half yearly on every 6 months, and they are supposed to pay the full amount. So what we are doing is, this 2 month extra amount we are paying back to them at the time of purchase itself. At the time of purchase itself, these 2 months money, 20,000, is paid by us to them. Okay, so that is being recorded in the interest column as 20,000. So this is the first entry. Now let us take a look at the second entry. 1% of X on 1st March 2013. 1st March, okay. So after 1st December, there is no in between interest to be received, because again the interest will be received on 31st March. But what we done is, on 1st March 2013, the firm sold all of these debentures at 103x interest price, again paying brokerage at 1% of the X interest amount. So we are selling these investments. Selling in the sense, investment goes, money comes. Bank account debted to investment. So in the investment account it will be like, on 1st March, right? 1st March 2013, by bank, money comes in. So the quantity which we sold is full. Entire amount or the entire debentures is being sold. So 10,000, and the amount for which we are going to sell this is 103x interest price. So that price does not include the interest. So let's prepare the working note for calculating the amount and the interest. Working note number 2. So selling price. Selling price is 103 into 10,000. 10,000 debentures at the price of 103. So 103 into 10,000 gives 10,30,000. And now we have paid a brokerage of 1% while selling. So now you see, in case of purchase, when we paid the brokerage of 1%, we added it along with our cost because that was our cost. But now in case of selling price, while doing the sales, we are receiving 10,30,000, and out of these we are paying 1% brokerage. So the remaining amount will be shown as the actual selling price. Okay. So the expense relating to the selling is deducted from here. So the brokerage is being deducted from selling amount, selling value, sales value. So 1% of 10,30,000, the brokerage. So the net sales amount which we are going to receive will be the difference between these two. Okay. So 10,300, I think. Yes, minus 10,300 gives 10,19,700 is the net sales value which we are going to get. 10,30,000 we got, but we had to pay 1% to the broker, or brokerage fees was 1%. So the remaining will be the net sales value, and the amount of investment will be 10,19,700. 10,19,700. Now relating to the interest part. In case of interest, now see the time when the other person, now we have sold this investment and now this investment is in the hands of other person. So on 31st March, that person or the buyer of this investment from us is going to receive the interest of 6 months, but he has held only the investment for 1 month, right? He held the investment only for 1 month and he is going to get the interest for 6 months. That is not fair. So what we are doing is, we have held the investment for 5 months now. Already 2 months amount we have paid, right? And now from 1st December, January, February, March, 4 months we have held the investment for 4 months, and 2 months amount we have already paid to the company. So we are eligible to get the 6 months. We are eligible to get the 6 months dividend, but now we have sold this. We have sold this investment. So we are eligible to get the interest of 5 months. 1 month, only for 1 month the buyer of the investment from us is eligible to get. Now once the company pays the debentures interest on 31st March, he is going to pay the 6 months interest to the holder of the debenture, right? They are going to get the interest, but actually for 5 months we were eligible to get the debenture and not him. We were eligible to get the interest. So what we do is, at the time of sale itself, the buyer of the debenture from our hands is giving us an amount as the interest. The amount of interest he is providing us, and later on when he gets that interest, he will be taking full amount by himself itself. So that means, one second, I'll show you. Working on interest. So we had 10,000 in debentures in our hands, face value 100, 10 lakh. The interest will be at 12%, 12 by 100. Now we have held the investment in our hands for 5 months. So for these 5 months we are supposed to get the interest, but when the company is providing interest, the company will be providing the 6 month interest to the buyer of the investment or the buyer of the debentures. So he will be getting the 6 month interest, but actually we were supposed to get the 5 month interest. So the person or the buyer along with the sales amount is also providing us with these 5 months interest. So the 5 months interest will be 5 by 12 for 5 months. So the amount will be 10 lakh into 12 by 100 into 5 divided by 12, in the sense 50,000. So along with the sales value, the buyer of our investment will also be providing us with an interest of 50,000. Okay, I hope you understood this concept. So we will be getting sales value of 10,19,700 and interest on this as 50,000. Okay. So this is the investment account, and now let's see, that entry is also finished. Now let's see what is there next. Nothing. Prepare investment account. So only this much. We had purchased some investment and now we have sold that investment. This is the only thing here. So now let's balance. So 10,000 10,000, 10,000, 50,000, 20,000. The remaining interest will go to the P&L. Okay, to P&L account. The remaining interest is supposed to go to the P&L. Sorry, 50,000, 30,000, and here 10 lakh, 20,000, 100. 10 lakh. Here is the balancing figure. So, is the profit which we are going to receive from the sale of investment. 400 is the profit which we are going to receive from the sale of investment, and that also will go to the P&L of profit. And this is an expense which will go to the P&L. So this is how we prepare the investment account. So I hope you are clear with the solution. If you are not yet clear, again we have so many illustrations in our hands, so many illustrations in our study material. We will be solving each and every problem, and once you do each and every problem of this chapter, you will be clear with all the concepts relating to this chapter. So that's all of illustration number 1. So thank you, and in next video we will be solving our illustration number 2. Bye.